Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, July the 18th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember, the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data across the pond. Out of Great Britain, we got CPI year over year came in at 2.4%, expected to be 2.6%, so slightly lower than expected there. We also got PPI input came in at 0.2%, expected to be 0.2%. All of these numbers so far are Great Britain. And we got core CPI coming in at 1.9%, expected to be 2.1%. All right. A couple of those things. One more thing is PPI output was 0.1%, expected to be 0.3%. So we're seeing a lot of inflationary numbers really come off. We're not seeing that inflation in those numbers, at least in Great Britain. And then here in the United States, we got building permits. Remember, building permits, you can pull as many building permits as you want. It doesn't necessarily mean you're going to build. It just means you may build, and you want to have that ready in the waiting anyway. So it came in at 2.7%, or 1.27 million permits, expected to be 1.33 million permits. Now, housing starts came in at 1.17 million units started, expected to be 1.32 million units started. So lower than expected on the permit pull and housing starts. So when you're pulling back on doing the permits, it very well indicates that you may be holding off on your housing starts, which is what we're seeing here show up in that number. Anytime you see the permits being kind of coming off, that is a little bit of a red flag. We also have Powell speaking, and crude oil inventories came in at 5.5 million barrel build, and it was expected to be a drawdown of 3.4 million barrels. That being said, a build, we're getting a rally today in crude oil. Bizarre how crude oil has been acting. We had that big sell-off on that big 12 million barrel drawdown last month. They didn't do any revisions to it, so that was a real number. And then today we get the build and we start getting the bounce in crude oil. So bizarre circumstances. Later on today we get Beige Book. That's at 2 o'clock Eastern. That is a pretty important number. A lot of people don't really look at that, but that is the book that the Fed looks at. There's a couple other ones. I think it's the Blue Book or a couple other names, Green Book, that are private that they get. But the Beige Book is released a couple of weeks ahead of the FOMC. So it gives you a very good idea as to what the data is that the Fed is going to make their rate decision based on. So keep that in mind. Take a look at Beige Book. It's more important than what the broader industry really gives it credit for. All right, so like I said, crude oil getting a little bit of bounce, maybe mostly off of this 38.2 Fibonacci level. I told you it was going to go down here and test this point of control, I thought, where the most time and volume has been spent. Came up just slightly shy of that. It's on the upper band of it. Thought maybe we'd see more of a break through this 38 Fibonacci level, but with this market, the way it's acting, it may very well be very counterintuitive to what the data is showing, and it may be a little overdone to the downside here. All right, gold comes down and tests the 38 Fibonacci level, and the 1220 area came down, just ticked on it right there to that support level, and we're getting a bit of a bounce. No confirmation as of yet, but this big sell-off in gold is just way overdone to the downside, I think. So I think we're going to get some kind of a bounce. I may be looking at a couple of things with gold, maybe GLD, GDXJ, or something like that for the gold miners on the ETF side to play this to the upside. Haven't done anything right now because I'm trying to hold a lot of margin for these earnings trades, those are very margin intensive. But if I do something where I'm buying calls or buying puts, then that doesn't really take up that much, right? So I might be playing something like that to the upside if I can do some debit spreads or debit buying with the gold futures, all right? But I haven't done anything there yet. And Bitcoin, I didn't talk about this yesterday. Nice big bounce in Bitcoin yesterday, covering this little gap here. That is pretty important. That might make us clear it. But you know, a lot of times when you're kind of bouncing around here, you cover that gap. We could see another extension to the downside. Nothing. I haven't traded Bitcoin and don't really have a position in it. I don't know how this is going to react. You know, one of the Fed governor came out today and said cryptocurrencies are great if you're into hiding your money and money laundering. Well, I don't know if that was an endorsement or a call to action, but at the end of the day, a lot of people were rejoicing that comment. Bonds coming off a little bit, you know, nothing to see here. Bonds aren't going to go anywhere. I've got my stuff played to the downside in bonds using TLT, so I'm just kind of keeping an eye on this. I think it's still going to roll over a little bit. Hopefully. All right, and VIX into the 11s. Hopefully we don't get down into the single digits, but it should find a little bit of support here. I think that there's enough uncertainty in the overall economic picture that volatility should remain at least in double digits. And then the Dow Jones Industrial Average up about 79 points, just trudging its way along after we got above this point of control, and which lined up very nicely with the 23 Fibonacci extension. That being said, that's going to act as support, and you can see we're up and away from that. It looks like we have found a positive momentum here. We'd like to see this come up and test the 38.2 Fibonacci level for a real rally to occur, I think. NASDAQ, not the same situation here. Tech's had a really good run, as you can see, yesterday and today, making historical highs. But that being said, it might be a little bit overdone. We played the tech sector for a little while to the upside as it was being kind of beaten up, and that did very well for us. Now we might be seeing some more sector rotation into some of the blue chips like the Dow Jones Industrial Average, which is why the tech would be down and the Dow would be up. Okay, so keep your eyes out for a sector rotation out of tech because it's had a nice little bull run there. Maybe pick up some financials or something like that. They've been doing pretty well since all of their most of the banks have released their earnings and most of them have beaten. Now, E-mini S&P has gotten above the 50 Fibonacci extension. We drew this in not too long ago. It's gotten above there yesterday, settled above there. We're staying above it so far right now. I'd like to see a little bit of upward momentum yet, but that being said, a big coup for the bulls to get above that 50-day, the 50 Fibonacci level. And this is very similar to what we saw in the NASDAQ and in the Dow Jones. Dow Jones hasn't quite breached this top that we see here in the E-mini S&Ps. All right, the daily chart of the E-mini S&Ps. This is 30-minute candles. Overnight inventory, you could say, got a little bit short and flushed out, but I think for the most part, the overall markets are primed and ready for at least a bit more of a push to the upside. All right, let's talk about some trades that I've done today. Or actually, this is the earnings trade I did. And with UAL, I went in and did a strangle. And the July contract, which expires on Friday, and sold the 68.78 strangle. So the 68 puts and the 78 puts at the same time creates that strangle, calls in the puts. And I originally sold that for 86 cents, I think it was. 76 cents. And just trying to remember, I just had to look down. And I was able to buy those back this morning for 42 cents. That being said, I was chasing it on the open. Remember, I like to say, get out of these on the open. I thought I was bidding it up a little bit too hard. Got away from me for a second. I got lucky on this fall and was able to get out of mine for 42 cents. Lost money on the calls, obviously, made full boat on the puts. So that worked out pretty good. Wasn't as good as I'd like to see, but at the end of the day, it worked out pretty good. Now, a couple of things you could do with this, if you did a strangle around UAL and you are still in this, then I would look to roll my 68 puts up to the 78 puts and create a straddle. Okay, so that's how you stay mechanical with these type of situations. If you had on an iron condor, you would roll it down those 68 puts up to the 78 puts with that defined risk and create the iron butterfly. So a couple of ways to play around with that. I went in and was really looking at rolling those up as well. Didn't think I was going to get them. The market came back off relatively soon afterwards and was able to get out for 40 some odd cents. So worked out okay. That being said, out of UAL, a couple other trades that I'm going to be looking at for today, which is the earnings. One thing I said, I'm going to be looking at maybe gold, playing it to the upside, maybe using the junior gold miners or the GDX, GLD maybe into play, but I'm going to have to look at those a little bit further. But Philip Morris, might be playing this to the upside. It just really feels like it's found a really nice bottom here. It's comfortable. I don't really see it wanting to break down below this 76 level, so I got pretty good placement on this particular strategy. If I was going to play it to the upside, I just think this is a major support. So don't think there's a whole lot of room to the downside in Philip Morris, so I'm going to probably play that to the upside. Game time decision, I do those at the end of the day. I think I'm going to finally stay away from IBM. I like IBM's move from a service into the cloud. Market doesn't seem to like that. So I'm going to probably stay away from IBM. I keep playing it to the upside, and I've gotten burned a couple times. So I'm going to maybe sit on the sidelines with IBM. It's going to be probably one of the first earnings that I haven't traded IBM in probably a couple of years. But I don't know about that one. All right, so let's look at eBay. Probably should update my Fibonacci's in eBay, so let's just remove that. eBay, I'm going to play it at the upside. They've been doing well. They have a great product. They don't have to do a whole lot to make money. I just sold a computer on there and saw them take $90 from me, so I'm going to play them to the upside. I think there's a lot of people on eBay. It is the poor man's Amazon, as my kids would say. Why are you on eBay? That's for poor people. But at the end of the day, eBay has a great product, and you can get good stuff on there. You can find anything. That's about it. That's all I'm really looking at. eBay, IBM, maybe American Express comes out after the close. Philip Morris in the AM. So those are the ones I'm going to be looking at. Okay, that's all I got for you guys today. Thursday's webinar is going to be on the ratio call spread. So check this one out. I'm going to show you how to build this out to increase your probabilities of success. We're going to be able to build a really cool strategy. Yes, you can figure it out online, but they will not give you strike locations and how to really have some rules in and around this to make it so that you are more comfortable and increase your probabilities of success. All right. So if you can't take that, take it easy.